The global markets have been on fire, riding an impressive multi-week gaining streak. The major indices have been pushing fresh highs, but the Nigerian stock market appears to be wobbling. The NGX All-Share Index have delivered an impressive 60% year-to-date return, pushing the market capitalization above the 159 trillion naira mark. And briefly, crossing that 252,000 psychological level points earlier this month. However, there have been some concerns, and we've seen recent profit taking with the index pulling back in the last few trading sections. So today we'll be talking about the key factors driving both the bull run and the consolidation, the MPC's latest decision, the T+1 switch, and a detailed breakdown of the Dangote Refinery IPO, including practical steps that retail investors can use to participate in the IPO. We'll also touch on global signals as new Fed chair Kevin Walsh assumes office as the 17th Fed chair, and will discuss the much anticipated SpaceX IPO. So if you stick around, I'll be providing actionable takeaway to help you navigate the weeks ahead. And welcome to The Edge, everyone. My name is Tony Okafor, and I'm glad that you found this channel. Here on The Edge, we provide actionable points to help you make an informed investment decision. Please like this video, and if you're new to this channel, please subscribe to the channel, hit the notification bell so that you can always be notified when a new episode is uploaded. Okay, so the NGX recently closed around 249,000 points, with about 60% year-to-date return. That's still very solid. The market capitalization at approximately 159 trillion naira mark. Domestic investors have stayed quite active in the market. They've helped to sustain transaction volumes even amid the recent consolidation that we talked about. So which sectors have stood out as the top performers lately? They are the industrial goods sector, led by stocks like Dangote Cement, has been strong alongside banking stocks, the likes of GT Co, Zenith Bank, Force Bank, Wema. And in the oil and gas space, you want to talk about Seplat and you talk about Aradel. So these areas are benefited from reforms, from improved FX liquidity and infrastructure momentum. On the flip side, risks such as overbought condition or profit taking in blue chip names are beginning to trigger, or they have triggered the near-term pullbacks that you've seen. So the recent mild correction, that's the way I like to say it. The recent mild correction is healthy digestion, if you ask me, after the 20% plus surge that we witnessed in April. But sustainability going forward would depend on inflation trends, naira stability, and the global oil dynamics. But overall, momentum looks resilient as domestic buying appears to be slowing. We'll probably have to, watch out for foreign inflows to help accelerate the next leg of the momentum. Now, let's talk about the recently concluded MPC meeting. So at I think the 305th meeting of the MPC that took place in May, the MPC unanimously held the monetary policy rate at 26.5%, after they had that 50 basis point cut in February. So this came even as headline inflation rose to about 15.69% in April. The expectation was that inflation was going to be between 15.7 and 15.8. So in a way, it came down slightly lower than estimates. So the question is why the hold instead of maybe further easing. Obviously, you understand that there are external factors driving core inflation within Nigeria. So it was appropriate for them to want to watch out for those signals. And that's why at this meeting, it made no sense for them to want to respond by raising interest rates because inflation appears to be going back up. So the committee appears focused on anchoring expectations, okay, amid the external shocks and the naira pressures. Naira is still relatively stable, I think around 1,373 to a dollar. So we are seeing some early disinflation signals, but some patience, I imagine, will be needed before meaningful easing can begin. So probably be looking at sometimes in September or sometimes in November before we begin to see a meaningful easing taking place. So we expect the MPC to continue to monitor inflation signals, FX stability, global energy, geopolitical tensions before making any meaningful rate decision. Now, let's talk about the T+1 settlement that is imminent. So, the Nigerian capital market, as you know, is transitioning to the T+1 settlement, effective, I think, June 1st. So, the current trading cycle is T+2. So, the aim is to reduce settlement risk and align the Nigerian market with global standards. So, how significant is this shift is the question. Okay, how significant is this shift? So it should meaningfully improve market efficiency. It should improve liquidity and appeal to foreign investors by signaling to them that the Nigerian capital market is mature. Practical implications for retail and institutional investors would include ensuring like faster funding, readiness, and adjusting to tighter timeline because obviously you have to get your trade settled T+1. So it would need a lot of adjustment. So, but there are potential challenges that I can think of. Tighter clearing and funding windows obviously could alter the trading behavior within the market in the short term. And we might see some volatility spikes, especially if you are a margin user. One global concern, that I've seen when a market transitions to a T+1 or faster settlement cycle is increased speculative activity. So don't be surprised if you begin to see increased speculative activity in the markets. So you also begin to see spikes in turnover because we're now talking about T+1 settlement. So the Nigerian market could become more volatile initially, but over a long time, would see that phase out. So on the positive side, the T+1 settlement should, one, improve Nigeria's chances of attracting larger frontier allocations. Already we talking about Nigeria returning to the FTSE index in September. So this is all done or in preparation towards that return to the NGX. So we should see Nigeria attracting larger frontier market players, and it should also strengthen Nigeria's global market relevance over time. So that's what the T+1 settlement should bring to the Nigerian capital market. Okay, now let's talk about the much talked about Dangote Refinery IPO. So the Dangote Refinery IPO is generating massive buzz everywhere I go, and people talk to me about this IPO. The private placement demand uh, already hit about $2 billion, and that was confirmed by Alhaji Aliko Dangote during the week. So they're targeting September 2026 for the listing and the subscription sometimes in August. So a lot to chew on this. Now, so this IPO could be one of Africa's largest ever IPO. And Pencom has already granted permission to pension funds the flexibility to participate. So it means there's going to be surge in demand during the IPO. Okay, so could this become the most transformative listing in Nigeria's capital market history? I mean, I'll say yes, absolutely. Because one thing that it could do is it has the scale to deepen liquidity, boost retail participation, and showcase Nigeria's industrial capacity on the global scale like no other company can. Okay. So especially with Nigeria, I mean, especially with Naira entry, you can invest in Naira and then you have potential dollar linked dividends. So that's going to be a massive investment. And for retail investors considering the Dangote IPO, I would recommend that you do your due diligence. I must be upfront with you. This is not going to be a get rich quick IPO. Okay. The company is still in its expansion phase. The company has about $3.65 billion current debt levels. And the valuation expectations, I would say, still fluid. However, in Nigeria's high inflation environment, this is the type of investment that you want because it fits into a long-term wealth building strategy. It's tangible infrastructure asset and provides an FS hedge, via dividend payment. If you're looking for diversification, if you're looking to hedge your investment, then this type of investment is what you want to have in your portfolio. So while the hype is high and it's very high, but you should also know that there are some notable operational, macro, and regulatory concerns that exist for this IPO and even for the company. So I would recommend that you watch closely, take informed decision. My recommended allocation strategy, and I'll say avoid overexposure to this IPO. Cap your allocation to this IPO within your portfolio to be around 5 to 10% of your portfolio. Okay. And it's a good way to diversify your portfolio. So treat the Dangote IPO as a multi-year hold, not a get rich quick IPO. I'm repeating that again. Okay. So that's the way you want to treat the IPO. It's not a get rich quick IPO. Now, what are the practical steps for local investors to participate in the Dangote IPO? So if you don't have a stockbroking account, you want to open one with a licensed NGX stockbroker, obtain your CSCS account number. This is mandatory for holding shares. Your broker can help you set one up during, know your customer setup when you are meeting with your stockbroker. So you complete the KYC documents well in advance, and it's important that you have Naira ready okay, when the offer opens. So you want to have Naira ready. So monitor the edge will provide a breakdown. We give you updates as we know them. Okay. So monitor official channels as well. So you want to be glued to the NGX, when the prospectus is going to be released. You also want to watch out any announcement from SEC and be in touch with your broker. Please avoid unofficial pre-registration scam channels asking or guaranteeing you spots. Please avoid them. Okay. So you want to submit your application promptly during the subscription window, okay, through your broker or any platform that have been designated to collect such registration. So apply realistically, okay, to improve your chances because there could be oversubscription and that could be obviously we are already seeing significant demand for the IPO. Okay. Right. So let's switch gears a bit and talk about some global context and talk about the SpaceX IPO as well. Okay. So globally, eyes now are major IPOs like the SpaceX. And I think that is expected somewhere around June or July. And it's potentially about 1.5 to 2 trillion valuation for the SpaceX IPO. That's the valuation of the company. We would know how much the company is going to raise shortly. And the valuation is tied to Starlink revenue and AI infrastructure. So if you want to compare, obviously there is no basis for comparison. These two companies are, different worlds and focusing on different sectors. So, but comparing SpaceX and Dangote Refinery IPO. Now, Dangote Refinery represents what I would say stable cash flow generating local infrastructure versus a SpaceX high growth, okay, disruptive technology model. So both carry valuation and I would say they both carry valuation and execution risk. Okay, but one is rooted in Nigeria's energy needs, all right, while the other bets on like a global innovation. And the revenue is going to be tied to Starlink's revenue. Okay. Now, with SpaceX potentially raising tens of billions of dollars, so such IPOs can obviously influence global capital flows. Okay. So for local participation or for your local portfolio, so you want to ensure that you are well diversified, and these are the type of investments you can make. So in addition to having local stocks in your portfolio, you want to blend the NGX opportunity with attractive international exposure like the SpaceX IPO. So you really want to watch out for these type of names as the opportunity arises if you are interested in participating in the IPO. Okay, so what are some of the takeaways I have for you today? So looking ahead of the second half, you should watch out for emerging trends, new listing, tasks, infrastructure reforms, AI, tech adoption could be what would sustain the next momentum. So you really want to watch out for companies in this space, okay? And watch out for new listings, watch out for IPOs. So my single most nuanced advice would be balance your current optimism, okay? And I've if you follow this channel, I've mentioned it a lot of time. Balance your current optimism with disciplined risk management. You want to stay diversified. And if you've not watched my video on the do's and don'ts in an election year, please watch that video. You'll see a lot. I talked about how you diversify your portfolio, especially in an election year. So you want to maintain liquidity buffers, okay? Maintain liquidity buffers so that you can always take advantage of dips and IPOs. Focus on fundamentals over hype, okay? Over hype. You don't want to just be pursuing stocks, okay? So focus on fundamentals. Fundamentals will beat emotions any day, okay? So please focus on fundamentals and monitor, policy executions, monitor election cycles as we currently have going on. Then watch debt levels and the global oil dynamics will be key. So whenever we hear a resolution to the crisis going on in the Middle East, you see that the market will respond positively and sharply to that. So market rewards patience. So the best time to really invest is when everything is quiet or when people are selling. You don't want to be investing when you are pursuing, when the prices keep scaling. Okay. So that's all I wanted to share with you today. So thank you for joining me for this solo run. If this has added value to you, please share with your friends, share with your communities, and please send in any questions that you may have. And please stay informed, invest wisely, and like this video on your way out. Please subscribe to the channel, and I'll catch you next time. Take care and bye.